The investment team of the Robotech strategy pride themselves on having long experience and specialist investment insights into robotics and automation technologies. Investing at the cutting edge of innovation requires specialist skill sets and also discipline to try to distinguish between genuine innovations and potential areas of hype. Our specialist knowledge in the space gives us the comfort and ability to invest in small and medium-sized companies that are often unknown by most investors and therefore would not appear in the majority of investment funds. Investing in smaller companies has historically been a strong driver of performance for the strategy. Smaller companies can often be some of the most unique businesses and often have a higher degree of innovation and purity to the theme of robotics and automation. We are sincere believers that investing in innovation is key to driving strong investor returns. Evidence over decades shows that companies that are investing the most in research and development and companies that are filing the most patents to protect that innovation, on average, significantly outperform companies that underinvest in innovation. Companies that are innovating are often able to expand existing markets, accelerating growth, or sometimes able to create entirely new markets, and in turn are often well rewarded by investors. We typically have around 50 holdings in the strategy. Having 50 names means the portfolio can be sufficiently broad to capture opportunities across the many specialist technologies and niche markets that we invest in. Importantly, having some breadth also helps us to manage risk. Investing in new technologies and emerging opportunities can be very rewarding for investors. But with that often comes additional uncertainty and more volatility. We have to be humble and recognize that not every investment we make will materialize in the way that we expect, and sometimes new technologies disappoint, and therefore risk management and appropriately sizing our positions is very important. One way to try and mitigate risk when investing in new technologies is spending a lot of time trying to assess the commercial viability of new products. We often visit trade shows and attend specialist industry conferences, which allows us to see new innovations, talk to companies, and talk to customers of those companies to try to assess the opportunities. This can give us some unique insights into where new technologies are in their adoption cycle and understand better the competitive differentiation between companies. To help to do this, we travel the world doing a lot of site visits to factories and warehouses to see these automation technologies in operation. Here, we can speak to the people running the factories to discuss what works well, where their processes are currently struggling and they're looking for improvements, and what kind of technologies they are evaluating for future use. A vital part of the investment process is to recognize that not every good innovation is a good investment opportunity. We need to be comfortable that the companies are able to make money out of their innovations. We seek out companies that have strong long-term revenue and earnings growth. We want to understand their market positioning that the products have, where they sit in the value chain, and the company's ability to grow profitably going forward with pricing power and cost control. We believe that the robotics and automation industry is undergoing unprecedented changes at the moment, with the opportunity of physical AI creating new opportunities and disrupting many industries. We believe that more so than ever, there is real value in having an experienced, knowledgeable and passionate team managing the fund and navigating this exciting period. Thank you.